Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. I have to apologize ahead of time for two things. One, my voice. I was sick all weekend, guys, so I'm still recovering. The second is notice we have no intro because Lee is on holiday in Budapest. So he'll be back in a couple of weeks. Until then, I got to navigate this whole thing by myself. But today's video is an important video, guys, because this is going to focus on market turning points. What are the key technical turning points here in the market that we're looking for either a breakout or a breakdown? Two important things to look at, and we're going to see how it's stacking up for the case for both, because we have some important metrics, important support and resistance to focus on. And of course, we just got through the PPI. We got through the CPI. Both came in hot, not hotter than hot. The market has the highest bullish sentiment since November 2021. Remember what happened in November 2021? Bitcoin peaked, NASDAQ peaked, Russell peaked, and then following 2 months later, you had the S&P peak and then the decline in 2022. I want to talk about a couple economic cycles real quick here to kick this off. The first economic cycle I'll talk about is depending who you listen to, right? If you listen to business news, you'll hear people say things like, well, actually, rate cuts can be really bullish for the market, or rate cuts are bullish. And other people say, look at market history, rate cuts are always bearish. They're both right and they're both wrong. Here's the thing, you have to paint the complete picture. You can't just look at rate cut. Why are they cutting rates, right? Traditionally, you have metrics you can use, indicators you can use to determine if rate cuts are bearish or bullish. Let's just look at the last 24 years, the last 2-3 Sigma bubbles we had. We had .com, we had GFC. What were your indicators that you could look at to determine if a recession was imminent? You could look at the LEI, the leading economic indicator index, 0 false signals for 30 years. That was correct. You have a lag with that, but you had the leading economic indicators saying you're going to have a recession. You had the yield curve inversion saying you were going to have a recession. Lo and behold, the market started selling off well before the Fed cut rates. But when the Fed cut rates, the market did rally for a few weeks and then capitulated and continued its decline. This cycle setting up much more like the GFC, where the market is going to rally into the first rate cut. But it was the same metric. You had the LEI, which has now been most negative it has been since the GFC. And I think we're passing the GFC next month, okay? The yield curve inversion is the strongest and longest inversion in stock market history. In history, stronger and longer than the GFC, which dropped the S&P 57%. Does that mean this is going to happen tomorrow? No, but this is a predictor of what's to come with a 100% accuracy rate. But I think we're going to rally into that rate cut, combined with the presidential election we have this year as well. So I'm looking for turns to trade, ways to look at this, ways to trade tops, trade bottoms, and profit and make stack some racks, as I like to say, bag up during this opportunity of volatility in the marketplace. So let's go ahead and jump into this, and you guys can tell me what you see here as well. Guys, I want to look at the 10-year first. What's it doing? I went over this on the Thursday update video. By the way, my first education video, new education video, is coming out with my trading system on our Discord later this week once I get my voice back, shooting for Wednesday or Thursday. So check out our Discord if you want to see that. You can go to our website, marketmakers.trade. Our old website is still active there. You can message Lee. He may take a couple days to reply to you in the Telegram if you need some assistance, but all the information is in the video description as well. So our uptrend is still intact on yields, even though we had this sell-off. We're at 4.44 right now, holding this line. We could bounce back up. We have a lot of Fed speak this week. We'll see how this plays out. Higher yields, bearish on the marketplace. DXY, what are we doing here? Same exact thing, guys. Sell off in the DXY. What about the uptrend that's been going on now since when? Since December. Uptrend is still intact as well. I mean, you're sitting right on the trend line. So nothing to see here yet. Hasn't broke down through it. Hasn't bounced substantially above it. What I want to look at real quick is our fractal retracements, right? This is the NQ. This is the NASDAQ retracement. Same timing, of course, are very similar to the the S&P that I've been sharing with you. But when you look at this, guys, I mean, this has been beautiful. If you've been watching this channel now for at least a few weeks, you've seen this play out, right? Because what I did was I went back and mapped the previous fractal from July 2023 all the way to October 2023. We looked at the symmetrical declines as it was declining, 9%, 22 bars in 30 days back in that July high to the first bottom. What did we do so far? 8.5%, 20 bars, 29 days, within a 0.5% of the same breakdown last year on the fractal and within one day. Why am I showing you this now? Because the next up leg could be completing here in the retracement. What was this? This move here, just from a count perspective, was 19 bars, 28 days. Where are we now? From our low to our current high, 21 bars, 31 days, within 2 days of this previous fractal as well. But more importantly, our actual timing here between the tops, 41 bars, 58 days for the wave 2 to kick in here. What do we have here? 41 bars, 60 days. Today we got our spike up in the NQ, which is why I'm sharing this with you. You made a new all-time high in the NQ, 18,794 on the exact day it was supposed to do it. On the exact day. Does that mean it's going down starting tomorrow? No, remember, fractals are repeating patterns. If everything repeated 100% the same, we would all be billionaires. I wouldn't be making this show. My butler would be making this show if I even cared to share any of this material, right? But this is just looking at probability. So now that I have this pattern, right? You set your table. I have the pattern. Do I have any patterns showing that the trend's extended, that we could be topping out, that we could be looking for a reversal, even if it's a pullback before springing back up? That's what we want to look at next. Let's start off on the Dow. Let's look at some other interesting things. You guys, I'm sure, have seen other people show this. This isn't anything unique. Just looking at the Dow here, the YM chart. If you go to the October 2007 high, drawing a trend line from the bodies, right? Just drawing a trend line from the bodies on a line chart, you're right up at peak resistance within a couple hundred points of peak resistance from your October 2007 high. You hit it here as well in the November 2021. You hit it again here in March of 2024, and you're about to hit it again. Does that mean it's going to turn down and fall apart? Not necessarily. Couldn't it just punch through? Of course it could, guys. We're looking at TA. We're timing the technicals. We're seeing how this plays out. Let's look at this on a daily chart and see what we got. We're going to go through all the indices. We got crypto, we got Bitcoin, all on deck as well. I'll try to make my voice hold out as long as possible. Key pattern I'm looking at, guys, is the W pattern here. You've seen me do this many times. This is right here. 2618 was just above you at 40,282. You can see that cross section of the trend lines here from holding your uptrend to the 2007 high, this nexus right here. I would love to see this get up to that 40,350 level. May not get there. We'll see. We're starting to drift here sideways. You're still below your all-time high. Also interesting, a lot was made of the Dow crossing 40,000. We, of course, are looking at the futures, but this has been at 40,000, and you're trying to get up to that level. You're selling off some right now at the time of this recording. What are your indicators telling you? You're about to get overbought on the daily time frame. Doesn't mean it can't get embedded. Doesn't mean it can't push higher. But again, looking for trend exhaustion. What about our volume? We know we like volume on this show. Wyckoff's key thing here was volume. We get rid of this. Volume has been below average the whole rally up. The whole rally up. Today's volume bar, if it finishes at this level, will be, and there's a couple hours left to trade, but this will be the lowest volume bar going back to December if it finishes at this level. Again, fewer participants have been paying higher prices. Volume divergence can help create tops. So when we're talking about tops, what am I saying? Am I saying, Brendan, am I saying, guys, I'm saying the crash is coming? No, what I'm looking for at least is some type of retracement to support. What I would like to see is those larger pattern fractals play out. We'll go over those in a second on the ES and the NQ. But at a minimum, I'm looking for some type of retracement, maybe to back test at least a 50 again, and then to come back up, maybe make your W if you're going to continue. Then you have the larger W pattern as well. You see how the patterns start to interconnect, and then we can get targets off of that. But to me, the trend is overdone. The trend is overextended. It was very light participation the whole rally up. You're going to see it across the indices. Right now, the Dow's at 40,031, trying to hold above 40,000. Let's look at the ES. Couple of things we talked about before was also just the actual decline here. Let's go ahead and measure this. So here's your July high, October low, right, from 2023. This played out over 93 days. 93 days, 11% decline. It also played out in a 5-wave fractal. So this is why I have a bias to look at it this way, because the timing is setting up perfectly to the day. This was the day that we're supposed to get the market top. Now, I thought the market top would be at a lower high based on the previous fractal, or at least I thought the bias would be for that. But remember, time is more important than price. I say that all the time. But this is supposed to be the market top before some type of retracement, some type of pull down. It doesn't have to mimic this exactly, but this is what we're looking for, the next wave down. So right now, let's go ahead and measure this between wave one, again, and wave two. 12 bars, 51 days, right? 12 bars, 51 days. What about over here? 12 bars, 53 days. If it plays out in the next day or two, the exact same way, and we start pulling back, then the key is going to become, what is that support level for the next turn in the marketplace, right? That's what we're going to be looking for. Now, remember, my blow off top scenario, where I have this going, whether we just do a soft pullback and then start accelerating into the summer, like some big perma bulls on Wall Street believe, like Tom Lee, or whether we grind this out for a larger and longer decline, which those numbers I have are 4821, 4700, 4585, then accelerate going into mid-November for a blow off top. Again, these patterns are based on market symmetry, equidistant moves in the market. These are just forecasts, okay? This isn't me guaranteeing something's going to happen in this fashion, but what is amazing is when they track true to form. So this is what I'm watching, guys. I'm looking for the turn here. We should be putting in a turn. Today we hit a high of 53.48. We hit a high of 53.49 the day before. So the market's still open. We could come up another $15, $16 and make the exact high on the exact day, just like the NASDAQ. But let's see if we start to retrace down to a support structure level. And if we do, we have the levels that we're looking at for our next bounce, because we'd be looking for the next move down, then the next move up, and this continual 5-wave fractal if it were to continue to play out. We also have the lower high scenario penned in here as well, guys. So let's go ahead and look at the actual TA. Are we at a key resistance level? Well, again, let's just break this down the way I like to break it down. What is our volume doing? Our volume is down left to right, okay? We have volume divergence, as you can see at the bottom of my screen, all below average volume. Below average volume, the entire rally up. Not one bar was at least average volume in a 3-week trend, okay? So below average volume the whole way up. Does that mean anything in and of itself? Not necessarily, but you had a parabolic rise, you had a sell-off, you formed a key fractal pattern, a W pattern, showing you that you're going to have some resistance. You had some at 1618 at 5227, you sold back off the 5175, 5180, you pump back up to the 2618 at 5345. Last video, I told you I expect resistance at harmonic expansion. What did we do? We hit it, we dropped, we're retesting it, we're getting rejected again. Again, with the timing in the marketplace. If this starts to turn down, we want to look at where this can turn down to in that next wave. And a couple of things you can do, just some basic TA, knowing the big bad robot, the algorithmic robot trades 50% of the market is traded this way with algorithms. You're looking at the 50 up here at 52.05. So if we start making a bearish structure here over the next couple of days, get some acceleration to the downside. You want to see some levels break to see yourself come down and retest the 50. Again, that would be my bare minimum case. I'm expecting a retest of the 50. And that would be roughly a 50% retracement just below 5,200, assuming that you come down a little bit past the 50. Okay. So that's what we'll be looking at. We're at 53.35, looking for a move down to at least retest the 50% retracement. A stronger bet here at 51.55 if we can turn down with some velocity. The price right now is 53.35 on the ES. What has to happen to flip up to the upside? I mean, that's simple. You have to take out 53.45. If you take out 53.45, the next key target that I'd be looking at is what? I'd be looking at 54.34. So if you can take out 53.45, the next level I'm looking at is 54.34. If you took that out, never needing a retest, never needing to catch your breath because GameStop's just on fire, never needing any of that, just pure euphoria, then 1618's up there at 55.62 if you just keep surging up. I don't think that's how it's going to play out. I think you're going to need a cool off period. Whether you just start chopping sideways, I think you're going to have some volatility. I think you're going to see this come down some as well. We look at our indicators. You're not quite overbought yet on the MFI, but this is the daily, so it lags. You get one candle a day. Let's take it down a level to 8-hour chart where you get 3 candles a day, right? 24-hour period. 8-hour chart, let me get rid of the volume. We look at the 8-hour chart. You can see your peak MFI was over here in May 7th, 2024, right? So May 7th. So in other words, you start to see divergence, higher highs in price, new high, new all-time high, right? What did the MFI do? The MFI went down, made lower lows. So again, this is what you want to see happen if you start to drift. You want to see up moves occur with strong upward movements, very little drift, very little resets, sharp upward movements. When you start drifting, start forming 3-wave tops, 5-wave tops like Head and Shoulders. This is when you know, and in confluence with your indicators, in confluence with your volume studies, in confluence with the patterns, the fractal patterns on the charts, that there may be a bias for a retracement coming in. Now, I should mention, and many of you know this, NVIDIA has their earnings, I think, the 25th? That's a big catalyst. Could the markets run up prior to that and sell off? Or could they, stay where they are and accelerate supernova if NVIDIA earnings come in really hot? I mean, the answer is yes. This is all why it's part of trading, right? So you're at 53.35 right now on price on the ES. You start finding your bearish divergence starting to form in the smaller time frames. You look at your larger time frames. You look at your key patterns. We know 53.45 was key resistance, and it's holding as key resistance, albeit just a couple of days. But we also know we had this parabolic run up on volume divergence, low participation. So I carry that knowledge with me across the patterns. When we look at the NQ, guys, same thing. We have our 5-wave fractal pattern. You guys have seen this many times now. Looking at this retracement, just the same as the July high, October low. We're hitting to the day when we're supposed to make our high, as I showed you in that first fractal retracement, right? So this is to the day when we were supposed to make our high, and we made a new intraday all-time high. So we'll see if this starts to play out and does at least a pullback as well. And if we pull back to my target levels, whether we get a 5-wave pattern or an ABC, a 3-wave double top correction, I had 16,786, 15,885. But we want to see how this plays out first. We don't have the knowledge yet. We don't have the candles forming. We have patterns. Patterns can play out. They don't have to play out, but this is what we're watching here on the chart. And then, of course, we have the lower high scenario as well. I'll go over those patterns more in depth. I want to cover the TA turning points here in this video. Looking at the NQ again, guys, on the daily time frame. When you look at the daily time frame, this has been, look at this. You're above the 50. Look at your volume. Do the same analysis. All of your up bars, the white bars for me, every single bar that since the rally has started has been lower. It's been below average volume the whole rally up. And today's volume bar, even with this big spike you got, today's volume bar, if it closes this way or slightly higher, right? As can't guarantee where it's going to close, but if it closes this way or slightly higher, it will be your lowest volume bar since December, since over here. So again, understand what happened last time you had a run up and you started getting declining volume with a very low volume bar. You made a top and then you did this move. Nothing's guaranteed. We're looking for clues. We're detectives in the marketplace. These are things that I pay attention to when I'm looking to formulate my trade ideas. So I have the W pattern here. As you guys know, we go over this ad nauseum every video. Have my W pattern, pulled my fib. I wanted to see 18,859 before I got too excited once we broke above the 1618, but we got all the way up to so far 18,794. We could get there at close. NVIDIA could get there, could get us there. We could get there tomorrow, or we may never get there. But right now in the daily time frame, you have a structure forming. We don't have a clear structure yet, but it's presenting as a three-wave top. We look at our MFI. You're getting close to being overbought. Momentum is good, as it should be with this up move, right? So you have good momentum. Let's take it down a level. Let's check out the 8 hours. 8 hours, you can see a three-wave top here. You're throwing in a doji right now. So again, these are all things that are forming. These are all things you need to keep in your back pocket when you're looking at the market, assessing the market. I see an exhausted trend across the major indices. I see divergence in the indicators. I see volume divergence, and I see key fractal patterns telling you you're near, in the case of the NASDAQ, key resistance. You're at key resistance in the S&P, and you hit key resistance in the Dow. So these are all things that are going to help us formulate trades moving forward. So look at Bitcoin, guys. Bitcoin zoomed out on the 3-day chart. If you were watching this channel in October 2023, I gave you the setup for the breakout from the diamond pattern on YouTube. You broke out from this pattern. You gained 130% from this pattern. Okay. Where are we now? We hit the exact top that we thought we'd hit up here at 73K. If we look at this, we do our Fibonacci pulls, as you guys have seen us do many times now. Fibonacci pull back to the base of the diamond pattern, 73,765. How else was I able to triangulate this top, right? We measured this a couple of different ways before we got to the top to help us get confluence for the top. One way was, what was the first top difference with the second top? 6.44%. Now, again, market geometry, market symmetry often plays out in the marketplace. And when you get this down to actually, let's go ahead and tag the candle to make it super exact here. Get the candle, what is it, 7%? If I can get this mouse there, 7%, 6.5% difference between peak one, all-time high, peak two, all-time high, 7% difference between peak two and peak three. And so far, that's been the top, and we have this nice rebound back up, right? We have the nice rebound back up. And what you want to do, Bitcoin, crypto, which often leads the markets, has been lagging as the markets have been pumping. Crypto's waking back up and pumping back up. So we're going to zoom in on this as well. But from the zoomed out perspective, guys, the key levels I want to watch here on the zoom out is pulling a fib from your all-time high down to your corrective low so far. You got above the 618. 786 at 70,163 is an interesting level to me. And of course, you guys have seen me pull this over to the W pattern, the top, the second peak of the W pattern. For those of you that missed some of my videos, it's this W right here. And you can see you got above the 618, and the 786 is just slightly lower, 69,347, right? We look at this a couple of different ways. We can look at this zoomed in on our fractal pattern on the daily time frame Bitcoin. This is our bearish fractal corridor down here. We got out of here. We're back in the neutral fractal corridor. We've been talking about this W pattern that I wanted to see form, break out above the midpoint. It did that. And now you're accelerating to the upside, right? So these are all things we wanted to see. But the narrative, if you had just tuned out, if you stopped watching TA, stopped watching Bitcoin in March of 2024, you could have came back here a couple months later in May, and it's literally the same price, right? So it's the same price it was in March. So you missed all this, you missed some trades, big deal, but it's the same price. So you're in neutral territory, whereas the markets were hitting all-time highs. Could Bitcoin just keep going? Yeah. So let's do some dissection of this. What's going on with Bitcoin? Well, you're in the bullish territory in the MFI. Volume momentum's flat. I mean, Bitcoin to me is being reactionary. The thing is, this is risk. This is speculation. This is purest speculation you can get in the marketplace. So if the markets are starting to top and Bitcoin's doing a bit of a catch-up trade here, then I think you want to watch these levels pretty closely of where Bitcoin can get to, because if it finds resistance up here, especially around that 70K level up at the 786, which is only, 2,000 points away, right back up here, and this cluster of candles, okay? All these fractals up here is going to provide resistance if Bitcoin comes up. Then you want to start looking at, is Bitcoin topping? Did the markets break out? Is Brendan's patterns just completely wrong? The markets broke out, they keep ripping. Then I'm looking for Bitcoin to keep ripping, right? But if the markets start finding this resistance at these key levels that there's some of them are starting to hit now and start topping and look to do some type of retracement, it's going to give you opportunities in Bitcoin to trade. And when you see that zoomed out on the 3-day chart, again, I always look at things from a broader perspective as well, guys. This is nothing more so far than a 3-wave top. And if we come up to that 70,000 level, I want to look at that, because if we end up finding resistance between 70,000 and 73,843 again, this may be a good trading opportunity if the retracement cycle is to continue. And remember, where are my retracement targets for Bitcoin? This was really easy, right? So we pull our fib down here from the bottom. Get rid of this so not to confuse anybody. My 618 was 52K. We got all the way down to 56K, 56.5. So I have the 618 at 52K, and below that, I'm looking at 46K. So those are my targets. So in other words, if Bitcoin comes up more and tops out, if the markets top out, and they do start breaking down some for a deeper retracement or at least a pullback, we can see how Bitcoin will react. But ideally, I like to see it come test the 618 at 52. If it descends further, 46K, and I've already given you the upside projections. If we find our bottom, I'm looking at 110K Bitcoin from that level. So it's going to be interesting to watch. And right now, I'm just watching for a pattern to form, watching what the markets do here this week to see if they can break out or if they top out and start breaking down in accordance with an existing fractal pattern. Pretty fun to watch if you're into that type of stuff. I enjoy it personally. Let's go ahead and look at Solana. Solana's given us some great trades, as you guys know, so I'm not going to keep mentioning it. But we have this great breakout now in Solana. Again, Solana lagging Bitcoin. Bitcoin moves, Solana moves, Ethereum's moving. So this is what you want to see, right? You want to see everything start to catch up. However, and many people don't see this unless you zoom out, go to your 3-day chart. Look at your 3-day chart. You have this nice, clean double top forming. Doesn't mean it's going to be bearish and crater Solana. Again, I trade confluence of markets. So I'm looking at Solana. Can we get to 189? Can we get back up to that 200, 205 level, which gave us a great 45% drop that we traded, right? I want to watch this, see where the markets top, see if they rip through this resistance or if they start topping out, because this level, 189, 205, this has just been a beaut, right? This has been a great trade this year, able to trade this level twice now. If we get up there for a third time for a larger constructive pattern, even if it just comes back down to test support with a softer pullback in the markets, a softer pullback in Bitcoin, that's still a fantastic trade. Another 30, 40, 50% trade, guys. This is how you stack those racks. So let's look at Ethereum. 3-day chart. 3-day chart on Ethereum. Ethereum's just been a dud. I mean, look, Solana's pumping. Ethereum's not really pumping. It's 31, 34. We cover this repeatedly. I'm looking to see if we're going to get some life back into Ethereum here and get that wave up, right? At least attempt at least attempt a 3-wave double top. Let's see if it breaks out. It needs to get above 33.43. It's 31.33. It needs to stay above 2,800. It's been dead the last few videos I've been making for you guys. It's just a tight range, right? It's a tight range. You can trade it on day trades, but not doing a lot for me from a big pattern perspective. Ultimately, obviously, I think it's going to move with the larger, broader crypto market. What about the DAX? The DAX made the same pattern, made it first. Then the US markets, the European markets led in this case. And now you have the US markets move. Now you have Bitcoin moving, but the DAX is finding a top in this range too. the range between 18,710 and it went all the way up to 19K. So now you have some drift occurring. You had a sharp upward rise. Now you have a drift. When you drift, you can make patterns. You can make double tops, 5-wave patterns. You can make accumulation zones you break out from. So this all matters what happens in this range. It all matters as you see the other markets interact and relate with each other because they're all printing the same patterns. So still a wait and see for me on the DAX. Looking at the FTSE, I mean, you got a line pattern, right? You got a line in the sand pattern. You are in the Bollinger Band. You are just going sideways for days now. 84.46 on the FTSE. Nothing to see here yet. You're just sitting here on the FTSE, 84.46. Let's see if we can get a nice pull down here from a fractal low to a fractal high, or fractal high to a low, I mean. You can see we hit the 1618 perfectly, 84.92. That was still your high. Your high was 84.89, and you're at 84.46, but you're just going sideways. Nothing to see on the FTSE yet. I want to see this start to break down. You bounced off the money flow here. You came down some. You're trying to bounce back up. I would look to see if this level holds up. But again, trade it in confluence with what the other markets are doing. If we look at the Euro Stoxx 50, exact same pattern as the S&P, of course, exact same pattern as the DAX, of course. It's all the same big, dumb, elitist money in these marketplaces, guys. 3-wave double top pattern, right? 3-wave double top with supply getting dumped on you at this range. So 5070 is where you're at now. Your resistance up here was 5100. Let me go ahead and tag that. 5110. So you want to see what happens in this level. You already know all the other markets are up at this level testing resistance. So what do you think is going to happen if the S&P starts selling off? If the NASDAQ starts selling off, you're going to look for European markets to pull back as well. You can see it in the indicators. Your momentum starting to die off. MFI is rolling over slightly. Again, these are not big moves yet, right? So you had a pump up. You're flat. You're still above this cluster of candles. This is still a bullish formation. But again, I'm looking at exhausted markets. I want to see where this is going to lead to here in these marketplaces. Let me pull a fib here from that fractal to the fractal. Our 1618 was 5K. We got up to 5110. So again, we could see a pull down, a back test to a higher level here. This is a 5-day chart. Let me put this on a daily so we can actually get some indicators on here as well. Put this on a 50. Your 50 is down here at, where are we at? 49.76. So 49.76, another 100-point drop to come and back test your 50. Again, reasonable back test, right? It's a reasonable back test. So these are all levels you want to watch. You want to see how these play out. And if you're trading these different markets, I would just be patient and wait. We check our W pattern here, which is what I just did. You got right up to the 1618 at 5100, right? Now you're below it. You're back checking the 5045. That's where you bounce stuff off. So again, just kind of like the DAX, you're just in this range. You're starting to drift. Parabolic ascent, drifting sideways, overheated market. What do we got on gold? Gold has just been flush. Gold has been flush. Gold outperformed the S&P so far this year. So, but what do you have? The exact same macro pattern. The 3-wave double top with the second top giving you the Bitcoin double top, right? So you have your 3-wave double top, your second top is higher. Will this just continue up? You know, when gold outperformed, I think last time gold outperformed, what was it? The S&P in a major cycle? I think it was 2008. I think it was the GFC. Gold ran up more than the S&P. Obviously, gold pulled down 34% when the S&P fell 57%, but it ran up. A lot of people consider that a forecasting warning signal when you see the precious metals, a safe haven asset with 0% yield, outperforming something that has dividends and yield. So this is something to watch when you're looking at the metals as well. Some people consider it something to watch. It's outperformance of the equity market right now. A lot of this is overseas buying, overseas from the US. Very big gold purchases going on in Asia right now. But exact same pattern, guys. So again, this is something you want to watch. What's happening right now on gold. We look at this from our perspective here, 1618, 2 fib. Let's go out to our 3-day top here. I like to pull this from a bigger perspective because this was such a long accumulation zone. And again, we've done this many times before. A lot of gold bugs, a lot of silver bugs. I forgot to add silver. I'll do silver next time, guys, but my voice is starting to go. 2362 was the 1618. You got above it. You broke above it again. This is good for gold, but again, it's tracking identical to the S&P. Going over this many times, I'll just share this really quickly. This is why you want to be careful when you're looking at gold, looking at the S&P and thinking that things are different. I mean, look at this is the S&P in gold, the exact same pattern. Okay. You have your correctives. We've been over this many times, but you have your downs, you have your sell off, your rally up, your sell off, your rally up. It's the exact same movements, guys. So just be careful. These assets have money flows that are all tied together. These are key turning points in the market to monitor, to watch. Let me know what you guys think. Be sure to like and subscribe. And I got to go because my throat is dying, but I'll see you guys next video. Hope to see you guys in the Discord. Take care, everybody.